we'll be listening to you shortly here about the LED. And so, wow, these market updates, it's like ever changing. It's hard to, you used to be able to prepare these a couple of days in advance, but because every day something different happens, you gotta jump in. So, I know we got gas showing us down 60 cents in front. So a lot of these charts show it up until the close yesterday. And of course, we don't know what's going to end up happening by the end of the day today, but it's down in front today. But we'll go through this, and that's just typical day here. But first of all, let's just go into again. I know these charts seem redundant, but I always want to remind everyone, because there's people on the call here, many new people. But the importance of natural gas prices and electricity pricing, and just why it's so important. You see this correlation here. This is West Hub, and this is PJM West Hub, which pretty much sets the market. Pretty much all the East Coast and Midwest are kind of like in this thing, and you see here it's just pretty much losing lockstep. And the same thing with ERCOT. We did normalize out February 2021. But again, it pretty much moves in lockstep, and this is kind of looking at kind of rolling past 12 months. Reason why here, gas is the marginal fuel. It's ever growing to continue. It's the marginal fuel, and what is being the price setter, being the margin one that is that molecule of gas. It's coming through. This is the one the gas generators are the ones kind of setting the pricing out there for most of the time on the grid. Going into a natural gas price trend. As you see here, this is the strip out 12 months out on the strip. And you've seen we've had quite a big rise since last year at this time. And, we're trading right around below the $4 area. And now we're hitting up again $8 area and above for the third time, although this morning it's dropped, this strip's probably dropped about 20 cents or so. But this is here, the trend is there, as you see here in this line. This is kind of a trend line here. We're having some higher highs, some lower lows, and that always means that the trend continues to go upwards. We did expect a Labor Day kind of dip. I was hoping for a little bit bigger dip than we got, but we had that. And that was around that Labor Day time. It's kind of historically this happens. But now we're in the point where we're facing the fall here. And next month when we have this, we're going to be about 2 weeks out from where storage usually peaks out on the ejection part. We'll know what we have much more clearly. And it's going to be cold weather. We'll start, if there's going to be cold weather early, it'll be starting to show up. And I can tell you, you do not want to be short this market. And you are short. I remind you again, if you don't have anything positioned, and you don't have a purchase yet made for this coming winter, you are short the market, and you don't really want to be short 100% going into that early mid-October area. That's it. That's the time period where early cold could show, and that's where this market can go parabolic. This is a winter fear gauge. I call this the March-April spread. It's March-April spread. It's really called the winter fear gauge, and this is just kind of the difference between what March is at. Oh, I think I was on mute there. Was I on mute? Was I on mute in that part there?
No, you're good.
Okay, thank you. I'm sorry about that. Sorry interruption here, but this is the winter fear gauge here, and it shows the March-April spread. And this is kind of what March kind of shows is that kind of period where it's still part of the winter period, and where that fear is like we could be running out of storage. And April starts injection, so it kind of shows like, okay, if we get to this point, what's that spread? How much are we going to put price in the fear? And you see this is hitting around that $2. And these are historical numbers, historical highs for this spread here. So keep that in mind. We'll keep an eye on that too. And this is what's causing these rise prices for that period. Here's the curve. We said it many times. There's value there in that period though, from April 23 and on. And you see we've had some big jumps April 23 and beyond in the past in the past month. We still see that is a value place to be at in comparison to where we are in the front. But again, you see this is the period here where you see going out there April 23, March 23, you see prices elevated around that $8 level, and it quickly starts dropping in April 23 and beyond. We still see value there out there in that part of the curve. And here's just kind of where the energy prices are right now, the calendar strips. So 2023, 665 out of the 2025 at 502. You see ERCOT, PJM, New York. This is 24/7 wholesale pricing, so it doesn't necessarily reflect what you're going to get because it's shaping risk, scheduling, all that stuff going into that. Different on-peak, off-peak volume. This is actually a 24/7 wholesale strip here, but it's a good guidelines to have, and it really shows a difference in pricing here as well. Look at this price changes since we last talked a month ago. $1.14 up movement in 2023, but pretty big movement. One of the bigger ones I've seen for like 2 years out in gas in a month period of time of 55 cents, and you see the power price is reflective of that as well. And if anything, I see power has moved more so than gas, really. Even again, just showing the stress that these LMPs have had this summer on it, just showing that sustainability of that. Natural gas storage, we just keep trending on this bottom line here near the 5-year minimum. We still see gas kind of storage here, 31.97 is the minimum. We have kind of average temps in October, and maybe even somewhat in November. We're probably going to finish around 3,300, 3,250 to 3,300. If we have, looks like we have some heat here in September coming out, and if October continues somewhat, the heat now, the above averages now are getting to be kind of, less intensive on the demand for gas. So if anything, if early cold starts showing, we could finish around 3,200 or so, 3,150 to 3,200. So this is so I'm playing that's huge. I mean, this is not a good, healthy storage level at all. A good level to be at right now would be around 3,700, 3,800. So we are pretty much guaranteed to probably finish 500 below those levels. But here's one upside chart here. This production has gotten better. U.S. dry gas production has gone to 97.7 BCF here in August. That's above the EA forecast for the year. It's starting to show up here, some of the increases in rig count, but of course it's not increased in a ton here, but it's getting there. It's right at the levels. We're maintaining these kind of levels here, it looks like, over the past few weeks. So this is a good sign. Now, the other sign now is, again, here's summer is continuing. I know it's going to be here in Chicago in the 90s this weekend and early next week, which is very hot. Yes, and we run our air conditioning in that weather, and with that, more generation goes on. Philadelphia, I know, is hitting up near those kind of temperatures. That's a good marker for the East Coast. And of course, down in Texas, yes, it's going to be cold. It's going to be 90s. I'm saying cold because they've used those hundreds, but it's going to be in the 90s as well. And you can see down here in this weather, all this is air conditioning load. All this is continued gas generation that generally is unexpected. And really, we should be hitting 100 BCF fills here, and this could temper that down much lower and bring us closer and closer to the bottom line of storage. LNG, yes, the U.S. is heating the world, and you can see here, this is, we're going to see now, we have almost 6 BCF a day that's expected to be added by 2025. The Calcasieu Pass came in ahead of schedule as far as the ramp up of that. So that's now operating. So we have 14 BCF a day now of capacity going out, and that's an increase of about 2.5 from last year at this time. Report on here you see is scheduled to come back online in November. And, so there goes that production increase. It's going right back out. So it's really interesting. And there have been improvements in methods in decreasing construction time. So it's now going to be about 24 to 36 months of time to do the construction on these, and that's why these are coming online pretty quick. But yeah, this is going to grow to 20 BCF, and trust me, with the gas prices that are out there in the world, this is going to be sent out, and makes it where we need to increase production, or else we face this deficit here, or else. So global prices, and this is where I want to get to. This is pretty interesting here. This is a chart I saw. I found this interesting. Henry Hub, of course, you all know that. You look at the prices are over here. TTF, that's the kind of Dutch, it's kind of marker for European gas. JKM is the Japan-Korea marker, so that's the marker for Asia. And this is just breakthrough too. A couple things on this chart here. One is this is crude oil. You see all the news out there about crude oil as far as here in the U.S. and increases in that. Really, it's not a ton here. It really hasn't all that much. But natural gas prices, this is what's really kind of exploded. And we were having these issues beforehand. And all this is kind of like we knew this was going to be happening. But you saw here this big jump here, and now we're up here, and it's a and here's us. So boom, here's us, and those LNG very profitable. So it's interesting. And this is one reason why this has spiked up. This is the daily gas flows from Russia to Europe by route. And the big one, of course, is Nord Stream. Here it is. Russia likes to play games and send out a trickle here and there to them and say there's maintenance needs on it. But this is a big reason. And if everything, when everything, 12-month forward prices in power in Germany and a lot of Europe, France, is all around at $450 to $500 range right now, megawatt hour. It actually hit up. This gas prices hit up around $100 in this TTF for 12-month forward, and they actually declined. That was about a month ago, a little less than a month ago. And power prices in that same period spiked up to $1,000 a megawatt hour. So, we're lucky here when we're looking at prices of 70, 80, 90, 100. We're lucky. But it's really interesting to see this. And this has an effect here. Why? Because if we're starting to run out of gas here in a really cold winter, this gas here is a swing state, and people have to make a decision. Do I send it over to Europe, or do I send it or to keep it here in the U.S.? And there's no obligation. None of these LNG terminals are patriotic and say, hey, I want to keep it here in the U.S. They can send it out, and they will at the prices. So we get no price bidding war for those molecules of gas, and that will set the gas price. So that's the concern, and especially in the pool area where in New England, because there's lack of gas out there, or lack of gas pipelines get the gas up there. So they actually import LNG on certain days, and I know they're trying to get what they can. So they'll be competing in this cash market for LNG. Other market developments, pipeline constraints. Yes, there's pipeline constraints, and there's pipelines that need to be approved. And this is going to put a ceiling on natural gas production. Why? Because nobody's going to invest to drill and produce gas, so it can't go anywhere. So that's one of the big issues out there right now. I want everyone to know, be careful. I reminded you this last time, but I just want to put it out there again. Be careful of counterparty risk. Counterparty risk is when you have a contract with somebody and they said, like, hey, I'll provide this to you during this term at this price. If something happens to that company, that contract is void. So here's the issue. Credit risk is huge on this stuff. When you're out there and you need to, and a supplier is not fully hedged properly, they will go out of business if prices spike, and we're starting to see it already. I'm hearing rumblings. I'm not going to start rumors here. I connected. I know some of the stuff going on. There's some suppliers somewhat at risk, and when they go out, and you think you bought power at $60 a megawatt hour, now it's 90, and they go out of business. Guess what? You're now paying $90 a megawatt hour. So even though they might be a couple dollars less than another supplier, you got to weigh that into the factors. And our team here, the Strategic Solutions team, me and Allie, we're here to help you steer around that. So just let us know. I have this on here, and I crossed it out this morning because it's averted. Thank God. Train strike. What are equal coal supply issues? And that might be one of the reasons why gas is down here this morning. And we had a bigger chance to really dig into the fundamentals on this at all, but of what's going on this morning here. But this was going to be one of the issues out there, was the coal wouldn't be able to really be transported. It's heavily transported on a train. It's not transported through a pipeline, obviously, like gas. It's transported on trains. We see those coal cars all the time. They run through, and we're stopped there. If we're not looking at our iPhone, we're stopped at a train stop. We're looking at those trains go by, and there's coal trucks, a bunch of coal cars, and that would have been a huge hit. And we're natural gas even more up there. Came hurricane season. Really, I mean, it's here. I don't put as much credence in hurricanes anyways, because I actually look at it more of a demand destructive thing. It's not like it was 15, 16 years ago in Katrina, when there was like 7 BCF a day, spit it out of the Gulf of Mexico, needed to shut down. Now we're down to about a 1 to 1.5 BCF a day. And in fact, it also could stop LNG trains from going out, so could keep some of that here for a little bit. So not to mention the power going down. Lastly, just want to point out there, intraday prices, just to remind everybody, intraday price movements. In the big up days, suppliers halt pricing. They just like, it's can't give a curve, we're not going to price. And I think we all understand why. The big down days, like today, suppliers are going to delay the pricing with the down movement. So you're not going to see, just because power might be down $3 in 2023 right now, in fact, but you're not going to see that reflective in any sort of intraday price curve, because with volatility, they're going to price that in. There's a potential that they don't necessarily want to keep updating price curves or denying pricing. So if they may not even update their curves, and if they do, it's going to be very little. So it's always best to probably delay. So if the pricing is done today, I might wait till tomorrow. Now, here's the thing though, is, of course, strategies. Be disciplined. Remember, you're not taking a long position, you're covering a short position. I think I've been over that enough. Set a strike price. Here you go. So, the better thing to do, you can set a strike price. And we can rework with all suppliers, and we know which ones do this really well, where they'll do a strike price agreement with you. So if you have a set price, we can have it in the contract that's immediately executable, say for a 30-day period. You give them to execute that. So that's the best way to really participate in a market dip, is to have that available. So and then finally, and again, work with our team here. We can totally help you out through this. We're here for you. Hedge something. Take advantage of drops by hedging a partial percentage of load and the remainder later. This is really important. Just, really have something hedged, have strategy. Again, this is what we're here for, what we're working on for you guys. We're here to work with your customers and get on the phone with them. And that's it. I know we're going to have some questions, probably take them later on. But Allie, I'll let you take over the ESG overview.
Awesome. Thank you, Scott. Glad we avoided that train strike for sure. That's great news. Turning back to our ESG overview, we've been doing this webinar series to highlight ESG and the different product and service offerings that Box brings to your customers in addition to strategic procurement. So first and foremost, what is ESG? ESG is your environmental, social, and governance criteria. These are a set of standards set by a company's board, stakeholders such as even customers and investors as well, that basically they are going to use to screen where they are going to put their money. If you're a conscious consumer, then this is something where you're looking at a company's supply chain, you're looking at their emissions, you're wanting to see that they are working to reduce their carbon footprint or at least be aware of it. And you're wanting to work with companies that are net neutral as far as carbon emissions or impact on the environment. At Box, we are focused obviously on the environmental side. That is where we're focusing on consumption, carbon emissions, green energy initiatives and incentives, sustainability, and energy efficiency. All of these pieces will play into a company's ESG strategy. And as we start to see ESG affect more and more businesses, this is already something that is that your larger companies are going to be very aware of. Retail companies are becoming more and more aware of ESG and the different ways that they can help to manage it, different ways that they can help to monetize it. So this is a very relevant conversation and something that you should definitely speak with your customers about. Today, we are going to be focusing on LED lighting. LED lighting is one of our on-site efficiency energy solutions. So we're talking about reducing the number of kilowatt hours that actually go through the meter. We're leading with this chart that I found online, which compares and contrasts a few different types of lighting, looking at basically the dumbest technology. We have our incandescent bulbs. There's really nothing good about these bulbs. They're inefficient. This slide says, they're visually appealing but morally toxic. Basically, they are sucking up a whole bunch of electricity. They are turning it into heat. They are very inefficient devices, and fortunately, this is an easy change. We look at compact fluorescent. Compact fluorescent beats incandescent hands down. They're also very visually appealing. They're good if you kind of like the planet, but they are basically a bench warmer in comparison to LED, which is the CFL's cool older brother. They're kind of ugly, or they can be in their raw form, but it really is what's inside that counts. These guys are efficient, they are long lasting, they have so many benefits that we will talk about in just a couple minutes. These are the types of bulbs you could take home to mom. They are your varsity starter. So I just wanted to share this with you guys. I was cracking up over it the other day when I found it. So it's helpful to see how lighting technology has evolved. And on that note, we'll get into LED and our specifics here. So LED stands for light emitting diode. An LED is a semiconductor device. So what that means is that it generates light through a process called electroluminescence. Basically, when you pass an electric current through semiconductor material, it emits visible light. This is the exact reverse technology that you see with a solar photovoltaic cell, which converts light into electricity. This is the exact opposite of that. We've known about LED technology in its most basic form for 50 plus years. So this is old technology that is getting a facelift, that is now more commonly available. And we're seeing applications in a whole bunch of different industries. Currently, we're working with third generation LEDs. The first generation was essentially developed by a scientist who was working for General Electric back in the 60s. They were used as indicator lights on circuit boards and really became known for their durability and efficiency. Again, that's really just an on-off switch and a tiny little light. We did have a second generation in the 80s and 90s where a lot of municipalities adopted LEDs in their street lighting, stoplights and things like that. You might have seen some retrofits back then. But we are now working with the third generation, which is awesome. These have endless applications in terms of their design. You can have backlighting, you can have large commercial industrial lighting, you can have outdoor lighting that's rated for all different sorts of weather. So these guys have evolved, and they represent a fantastic opportunity for customers that are looking to reduce their consumption related to their lighting. LEDs last longer, they perform better, they're more durable, they're more energy efficient than any other type of lighting. So we'll go into those benefits so that we can focus on those a little bit more. So we've got a chart here again, which compares an LED and CFL. The main benefit of LED is that it is the most energy efficient lighting on the market currently. These guys use 75% less energy than an incandescent bulb, oftentimes reducing the required wattage down to single digits. In addition, so that helps your customer to actually use less energy just by plugging in a new light bulb or by retrofitting an existing fixture. The other part of this is that they last up to 25 times longer than an incandescent bulb, and that saves you money two ways. Number one is that if you are a large customer who has to pay for maintenance, you're going to have to call somebody whenever a light goes out. It can be dangerous to have low light levels in manufacturing industries or in warehouse floors. So it's very important that lights are kept at appropriate levels. It's a huge concern as far as everybody's safety. So towards that, making sure that everything stays lit is very important. And if you have a light go out, you have to call somebody. They might have to bring in a lift to go up and actually change either a bulb or a light. So essentially, you're going to save on that maintenance cost just based on the lifetime of the bulb or the fixture lasting longer. Not only that, but you don't have to pay to replace it because it's not going anywhere. So that lifespan is really is a huge benefit. These guys also have better performance than anything else on the market. So they have no warm-up time. These are great lights for customers that do frequent switching if they want to be able to power on, power off. That's in contrast to items like high-pressure sodium lights you might have seen in gymnasiums or something like that. You turn the lights on and the lights turn on, but then they very slowly get brighter and brighter. LEDs are an instant change, which is awesome. They also perform even better in cold conditions. So other types of light, you tend to see lighting performance, the light levels tend to go down a little bit as temperatures approach freezing. LEDs actually are in contrast to that. They perform better in cold weather. And again, there's all different sorts of LEDs available on the market, which are rated for weather, for wet, etc. These guys have no heat or UV emissions. As we were talking about, I think I might have mentioned before, incandescent light converts about 90% of the energy that it uses into heat. That's again inefficient as far as the energy usage, but it also means that you're paying to air condition just based on turning on your lights. So the fact that these guys don't have any heat emissions means that you're going to save a little bit of money on your electricity bill and on your temperature controls as well, which is awesome. Again, these guys are very, very small, so their applications can be very flexible. You can put them just about anywhere. They have residential, commercial, and industrial applications. And so they can work for just about any sort of lighting that you need for anywhere. And finally, they are more sustainable to manufacture. So going back to that environmental piece where we're looking at sustainability, LEDs do not require mercury as part of their manufacturing process. So they are actually more environmentally friendly from the manufacturing perspective as well. Talking a little bit about getting into the project side. Box is partnered with several strategic partners. They have been in the lighting industry for 30 or 40 years, and we are very, very excited to be working with them and taking on some of these types of projects. This is a fantastic conversation for you to have with your customers who are really stressing about their energy usage. We have customers in Massachusetts, for example, that are going to be phasing down 44 cents per kilowatt hour. That's usually gas pricing, but it's going to be 44 cents a kilowatt hour in Massachusetts during the peak winter, which is when people are going to be, obviously, they're going to be paying for some electric heat. We're going to see huge demand coming in this winter. So for everybody who is really concerned about their consumption, they're saying, well, with the market running away from us, what are we supposed to do? LED lighting is a fantastic conversation to have with them, and it's really easy. All you have to say is, well, have you thought about doing LED lighting? Do you currently have LED lighting? If not, we can reduce your lighting-related consumption by 75% in most cases, and that can really impact their bill. That's a huge value proposition in contrast to what we are usually looking at from the supply and procurement side. With supply and procurement, we're working to help manage the actual cost of the kilowatt hour. Again, with these types of on-site efficiency initiatives that we're doing, we're actually working to control the number of kilowatt hours that flow through the meter. And so the customer will save the whole cost of the kilowatt hour. And if supply is 44 cents, then the whole cost of that kilowatt hour is, getting into the dollars. Here in Texas, in contrast, even where we have some of the lowest electricity prices in the country, we're looking at 15 and 16 cents per kilowatt hour. And when your customers don't use those kilowatt hours, all of that money is saving. So for these projects, customers must be in Texas for now. We are going to walk before we break out into a full national sprint, but we will advise as additional markets become available. We require a minimum of 10,000 square foot per deal. So that can be one 10,000 square foot facility. It can be a very large warehouse with many tens of thousands of square feet, or it can be smaller customers. If you have, for example, 10 customers that each have a 1,000 square foot facility, we're able to take looks of those as well. Customers must have lights running for 5+ hours a day. In most cases, that's not a problem. I know the lights at our office are on for at least 12 hours a day. And we must have a minimum of 10 lights per location. So whether it's looking at an indoor retrofit, an outdoor retrofit, looking at combining the two and doing both, we just need a minimum of 10 lights to be able to offer that customer some value for a project to qualify for us at this point. Moving into our process, the first thing that we're going to want to do is we're going to want to gather some documents. Usually these are customer invoices, usage files. We want to understand, again, square footage is very important. We want to know customers' hours of operation, so we want to know the runtime for all of those lights. We want to see any relevant building or lighting plans. Sometimes those can be outdated if the facility is very old, but they are still incredibly useful. We also want to know the customer goals or particular areas of interest. Is their goal to increase light levels and give everything a little bit better look and feel? That's something that we can do while keeping their consumption the same or even reducing their consumption relating to lighting usage. Or if they're just looking to save money, they just want to make their facility as efficient as possible, that's something that we'll take into account too. So we then will start to look at the economics of the project. Every building is unique, so the next step here is to have a surveyor or an auditor come out and actually look at the facility. That surveyor or auditor will know the different types of lights that are there. They will understand their wattage demands, things like that, and get a baseline for the facility's current lighting-based consumption. And then they will make recommendations as far as the types of fixtures that would be an appropriate swap. They will spec that, and they will be able to provide a proposal that shows exactly what they're going to take out, what they're going to replace it with, what the difference is in terms of the consumption, and provide a ROI for the project as well, or a return on investment. Usually we are targeting returns on investment of 2 years or less. That means your customer is going to completely pay off the costs of the project via their savings inside of 2 years. We do have financing options available for customers as well. So several of our retail energy partners that we partner with provide on-bill financing where if a customer is willing to come and do a supply agreement, then they can wrap the cost into that supply agreement, so there's no upfront cost to the customer. Lots of options available there. But basically, once we have that proposal, we know how much the project is going to cost, what the ROI is, and essentially when the customer is going to start seeing actual savings. Once that proposal is approved, it's time to set up the actual installation. Our partners will work with the customer to make sure that they are impacting their base business as least often as possible. They can do nighttime installations. They can do installations over the weekend for people who are running usual, 9 to 5, Monday through Friday. But they're happy to work with the customer and work on that installation schedule with them. Then following installation, they will clean everything up. They will leave it exactly the way they found it, just better lit and more energy efficient. They will recycle the old bulbs, and we will help to capture any sort of data needed for what's called measurement and verification, where you can submit to your local utility for incentives rebates. I know we're just piloting this in Texas, and basically every utility, I know Encore, as well as a regulated utility, Austin Energy, has awesome incentives for upgrading lighting and making the building more energy efficient. So we want to make sure that the customer takes advantage of those, and that those items are factored into the project economics as well. But that's something that we will show the customer that will help to finance the project. It's not something that the customer really needs to, to do any work on. This will all be done for them. So now that we've looked at the project overview, if you guys have customers who you would like to get this conversation started with, by all means, reach out to us, reach out to Scott, reach out to myself, reach out to your account manager. We are ready to start looking at these projects. We are ready to start offering customers this value in addition to all of our other strategic supply services that we've been talking about. So super excited about these projects. I love LED lighting because it's a physical difference for your customer and for their facility. In addition to being more energy efficient, they actually can have better light levels. They can look at the temperature of their lighting. They can understand the way that their lighting is influencing their safety, their productivity. New lighting can really, really, truly impact the look of the building as well. So it's a facelift and an energy efficiency play for them. So I'm really excited to start getting into some of these projects. If you have customers that you think would be good fits, reach out to your account managers. We are working with them to provide them with the checklist so that we can make sure that these projects qualify. But we're very excited to get started. All right, and now I think we've got questions.
The other question, so the first one here, since you're so in line here, the cost to replace all light bulbs with LED and savings, what is the break-even point on average?
On average, our ROI, our break-even point is 2 years or less. I have seen, for example, if we're looking at exterior projects only, looking at wall lights or parking lot lights, things like that, we can see ROIs at break even at 6 months, just because the LEDs are that much more efficient than the existing technology that's plugged in there. When it gets into office buildings or a little interior retrofits, that timeline tends to grow just because the wattage reduction isn't quite as powerful as it is with exterior lights. Ideally, a customer would do both. But we don't necessarily have to. So, but 2 years or under is the target for a good project in my opinion. That's a common industry target.
The 50% return on investment, it's going to be very hard to beat that, and it's pretty safe, risk-free. One more question we have here. I noticed the rig count is going much higher. Why is production not skyrocketing, going the same trajectory? Good question, great question. And real briefly, it's whenever these wells, a lot of production comes in that first year. and then they start declining the production rate. So they actually have to keep drilling just to keep the production going. So this is because, like, oh great, we're producing 97 BCF or 98 BCF a day right now. It doesn't mean that, like, oh, we just don't need to drill anymore, we're staying there at 98. No, those are in decline, so we need to keep that going. That's why you're not seeing as big of a jump there. And that's really the questions we have, and we got to keep moving here. And I'm just going to go over some strategic solution stuff now. Again, reminder, providing in-depth contracting usage analysis. These are all services we provide that really are trying to separate ourselves from other providers like ourselves, and to make to have our customers, who are our brokers and consultants out there, and really just, again, want to say you guys are all consultants to me. All of our consultants to make you guys do all these services that all the big boys do, and providing all these, and really be able to help you guys separate yourself and bring more value to the end customer, the one that actually uses the energy, who are your customers. So one of them is we're willing to perform in-depth contracting usage analysis. This is, I came from a supplier. I've worked with multiple suppliers. I've seen all the contracts out there. I know all the tricks and the trades, and we try to get you around them, including counterparty risk, as we talked about earlier. Custom proposals and presentations, we can work on providing those and help you guys out, develop those. Custom pricing solutions, again, these are just more strategic and strategy, procurement strategies to have. It's very important to be disciplined, as we know, compared to last year. We know all the ones that have not been. We have demand response here, and this is a program where, especially if you're in Texas, you're not participating in this. And you're able to participate in it. First of all, it's because you're not. I mean, you're being kind of foolish. But if you are able to participate in this, and say you got over 300 kW of load, and you're not pursuing this, you are just leaving money squarely on the table. We know many that have made quite a bit of money and really help reduce by bringing these credits in, has helped reduce the overall energy spend compared to what other people have had. Target pricing recommendations, again, that's just looking at market stuff. Community solar options, we're growing this out. I know it's been a little fits and starts. Community solar is very unique because it's like, there isn't like, hey, this is what it is like in New York. This is what it's like here. Each project is their own kind of rules and stipulations. Each state can have different rules, and each project and each area and all this. It just can really be different. And so we appreciate your patience on that as we, each one of these come on, it's going to be different, and it's a learning curve. But again, this is money that is left on the table if your customer is eligible to participate. And like demand response, where it's for larger customers, say just right hitting above, this is for smaller ones. We do have some certain situations there where there's some larger ones available, but for most part, it's for the smaller customer. RFP management execution. Hey, just go and try to get the RFP. Say, hey, we'll run the RFP for you, and see what kind of word help that gets you. We have a forms here that we can use in that RFP, and we can execute it. And with that, you have exclusivity on it, and guaranteed to win a deal on that end. Market timing and knowledge again, and then finally on-site solar analysis. Again, this is tough. It's not available everywhere. But one thing we're leaving off on here, Allie, is energy efficiency. We're going to add it to the list here. So we're going to be getting it in here for the next slide. Take a note of that. And finally, with all this is, hey, in some of these programs like demand response, these energy efficiency, there's some commission. It's involved with these services, but they're not going to be huge. They're going to be small. Really, the motivator behind utilizing all these things and the value add is really what you're bringing a value to the customer. Because if you don't bring these other solutions, or somebody else will. One of your competitors will. If you don't bring these solutions to the customer, you're not doing your job as a consultant. If you're not bringing these solutions to the customer and even prospecting, you're decreasing your chances of winning business. So that's why we provided this stuff. Again, so icing on the cake, maybe a little commission, but that should not be the chief motivator. And that's all we have today. We'll be hitting up again in a month from now. And, we really, any questions you have, just send them in for your account manager. We'll try to answer them. But everybody have a great day. Enjoy the rest of your summer here and the fall coming up and all that's going on there. Everybody have a great day. Thank you.
Thank you, guys.